Hey guys, I'm pretty sure I'm recording. I got a few requests in my inbox on Telegram to explain how I use the ADR. So I'm just going to make a quick video because I'm assuming it would be way, way quicker than kind of trying to type it, although I'm infamous for that. So having said that, so right now I'm on USD Chef. As you guys know, this is a pair that a lot of people are watching. Obviously, we were waiting for the US dollar to weaken. You've got a huge momentum candle going down, and I'm in this for the long haul. So this is just a demo account. I think I took this trade on one of the sessions that I did. In my live account, I'm also in this. And of course, I had my trailing stop set up, so my stop is now moved into profit. Anyhow, so right now on USD Chef, you guys can see, first off, take this with a grain of salt because it's only so accurate as with any indicator. There's a lot of websites that give this information, and that is what I used prior to Andre giving me this ADR. I just like how clean and tiny it is. It works for me. So yeah. Anyhow, so what this says is the 1 week average daily range, the 4 week average daily range, and of course the 12 week average daily range. There are other versions of this that give you more or less information, but depending on your personal preference, obviously they're all pretty comparable. Whoops, sorry. So what this means is, on average, this pair moves approximately 50 pips per day. Now, I may or may not be accurate when I say 50 pips, meaning in a total move. So like any move it makes in between here, okay, it can make 400 or 500 pips. That's not counted in the actual move. So from my understanding of how this works, as well as the other volatility calculators on I believe investing.com, when they calculate these right here, they're calculating it from the high and the low in terms of one trading day. So even if it does this in the middle of the day all day long, that's not part of the 50 pips. And as you can see, this is kind of a really slow moving pair. Well, it's slowish, it's safe, and compared to let's drag and drop GBP Canada. As you can see, this pair moves more than twice as much. So that is quite the difference in terms of how much it moves. But why this information is important is because while catching the big moves is nice, you want to know if it's already made its move for the day, then maybe you should wait. If it's already made the biggest part of its move, it's not going to quadruple this without some major news or an interest rate decision or an NFP. In general, the market's not going to go 400 pips today alone when the average daily range was only 120 without some major economic influence to do so. So having said that, it gives you kind of a really safe amount to take profit. And right now we're on the day chart, so let's go down. Let's see. Again, you guys know I use the 1 hour for the most part, but that means if you had saw this set up and it had a nice pullback and you were of course waiting for your money tree string line to turn colors or your moving average to cross, and you know that it's only moved so many pips for today, you know that you have a pretty safe amount of how many more pips it's going to move for that day. And you can enter, depending on if you're scalping or swing trading, setting a take profit is kind of nice, because the problem is if it moves down to here and it pulls back and then you missed all that, so it didn't close out. So by setting a take profit, yes, you minimize some of your gains sometimes, obviously, but you also maximize your profiting, your winning trades, if you will. At least, again, coming from a grain of salt, I don't think there's one way to do things. But in terms of the now and later strategy, in terms of just finding a safe way to get 30 to 50 pips, on a non-GBP pair, you can safely set it for 30 pips or half of the daily range, depending on what time frame you're using, or the entire daily range. And of course, you'd want your take profit to be preferably double from what your stop loss would be. And you can decide if you want to use a trailing stop, if you're swing trading or just scalping and all that good jazz. But I use this in terms of deciding a take profit. So I sent one of the strategies I used to the group in terms of the 22 and 44 and 77. And that works super well, particularly on the 4 hour. But you'll notice you're going to miss a lot of the huge moves, particularly on these big moving pairs. Because this clearly moved, let's say we didn't even get in till right here. So not a perfect entry, but a normal entry. three of your entries would have taken profit and exited. So that strategy, that 22, 44, 77, was based off of the fact that a lot of pairs don't move 120 pips a day. They move just a small handful of pips a day. And it gives you just a really safe amount. So if your average daily range, for instance, is 120 pips, you could easily say your first take profit was 40 and your next take profit was 80 and your third was 120. And then, of course, leave your last one as a runner if you decided to do that. Or if you're stacking twice, which is a lot more, it's easier to manage for most people. It's easier to divide your risk percentage into that. Then let's see. Sorry, I just got a comment on the different training I did. The sound is terrible. Okay, well, I'll get a microphone and then that will help. Anyhow, so that's what I use it for, is I use it to determine my safest and most likely to be hit take profits. Because if I'm using a pair like CHF JPY, you'll notice that the ADR is really small. I think there's even a smaller one. I forget which one. Some of them are just insanely, insanely small. So you're not going to try to go for 300 pips on this move because it just doesn't move fast enough, and it's not the best use of your resources. So when you're calculating what your take profit should be, kind of using either half of the daily range or all of the daily range, that will give you a really good idea of what to go for, at least in a safe, kind of consistent manner. Because we can't tell you to take 30 pips on one trade or 100 pips on one trade because every pair moves different. And there's so many variables, of course, that I could not possibly discuss in one video. But another thing about the average daily ranges is another tip or trick I learned actually, is if the average daily range is typically like in the hundreds, and all of a sudden the last 4 weeks it's only been 50, this pair has a breakout move coming that's going to be explosive. I mean, you would get that kind of information from investing.com and then their volatility calculator. You can type in 12 weeks, or you can type in 8 weeks, or you can type in 4 weeks. And if you notice that it's massively been stalling out for a few weeks, that's a really good indication that something big is coming in the market. So which direction, of course, we don't know, but the value of each currency, it kind of stays consistent overall. So when something is off balanced, essentially it needs to rebalance. So I hope you can hear me. I hope the sound is okay. And I hope it helps. Let me know if you have any questions or comments, and have a fantastic Thursday.